It's the Dan Shaffer Show, taking care of business.
Well, thank you for having me. This is a wonderful place to be. I'm going to go through a lot of information. This is a mile long and an inch deep. I talk about how this predicts the future and what to do right now. What do I see right now as of last night's close? Because everything here is updated as of last night. I'm very, very strict about doing that. I spent 4 hours yesterday making sure that you guys saw, because the markets are moving dramatically every day. This is the Dow Jones Industrial Average. So the 0 point at this bottom here when COVID in 2020 came all the way down. Then I measure up to here, and I measure 1.618 is right at this level where it topped out in early January. So is this a grand major super cycle? I don't know the answer. Nobody knows the future of the markets. I don't know the future of the markets. All I'm looking at is probability and statistics of what possibly could be. So I'm a little concerned about this right here when I see this kind of action. We're trained as human beings to fear losing our profits. And when we have losses, we hope they come back. That's how we are born. That's how our minds are created. It's not how much money you make, it's how much money you don't lose. Why do I bring that at this point about the banking system? Because the banking system and our government keep telling us information. And we wonder why the markets move in certain directions when we get certain information. And it's very unusual that you get good news, the market goes down, and you get bad news, the market goes up. And we've all seen it. How many have heard of this modern portfolio theory? And I always describe this as like putting one foot in a pail of ice and the other foot in boiling water, and on the average, you feel fine. That's what portfolio theory is like. Then we have here the Dow Jones Industrials. This was 1921 to 1932. Now, if I just stand over here and I go like this, it looks pretty attractive, right? Does that chart pattern kind of look familiar? Okay? I'm just giving you history. That's what happened, and we have a lot of similarity in the 20s happening today. Money is not exchanging hands the way it used to, and that's their biggest concern. It's lack of liquidity. This is corporate profits after tax with inventory valuations versus the S&P. You see this widening gap here? That's a problem to me. Look at medical care. That's where a lot of money's going. Here's where they got involved with giving a lot of handouts. So if they start raising interest rates, these lines are going to change. Their house values are going to go down and cost of borrowing is going to go up. This is what the Fed, in my opinion, is very worried about. So here's what I'm looking at right now. Right now, as of last night, this is the the S&P mini. Okay, this is the 200-day moving average is red, the 50-day moving average is blue, and you see it's been tracking the 50-day moving average for quite a period of time, and it may be rolling over. But this is all stocks on the New York Stock Exchange. It's not the Dow, which is 30. It's not the S&P, which is 500. It's not the Russell 2000. It's not the NASDAQ 100. This is every stock on the stock exchange, non-weighted. Now, this is what I watch really closely. This is what Alan Greenspan was wondering about. This is the 10-year to the 2-year Treasury back in 2006, and you can see now where we are. If it comes down and breaks that line and that spread gets there, I would be very careful about the future growth over the next few years. Bitcoin has changed the way we look at gold. Now, I do not trade Bitcoin. I do not own Bitcoin. I have no interest in Bitcoin. If I can't drop it on my foot or have it in my hands, I'm not trading it. There's this pattern that's setting up right now. This is 1929, 38 calendar days from this peak in September, 56 calendar days right here. This actually lines up today to March 5th, which I was expecting a low, okay? And it had the same moon cycle. So I'm watching that March 5th date. If we break through by this Friday or Monday or Tuesday, because it could be a little delayed, then we're probably going to go much lower in the market. And this is what it looks like, that there's a gap. There's two gaps here from 2021 at 39.94 on the S&P, right below 4,000. If we break that, that would be the target. And there's a time to go long, there's a time to go short, and there's a time to go fishing, and I love fishing. And that's Jesse Livermore, one of the legendary traders.